Yeah. So welcome to class. So let's talk about time frames. So this class is going to be so short. All right. So now in forex trading we have different time frames, right, for different purposes. Now, um, also in trading we have different types of trader. All right. So the kind of trader you are determines the type of time frames you are going to use. You understand? Now, for me, I'm a day trader, right? So because now let's talk about the types of trader that we have. Even though it is not necessary, all right, but you should know about it as a trader. Now we have four major types of forex traders. We have the scalpers. We have some people that we call scalpers. Scalpers. We have day traders. We have day traders. We have swing traders, and we have position traders, position traders. Now, um, you can either be one of these type of trader or two out of it. Now, for me, I can say I am two, right? So because I day trade and I also swing trade, all right. So now let's start from scalpers. Scalpers are those that whenever they enter a position, either buy or sell, they do not use up to 1 hour. They've closed their position. That is, they can even hold positions as little as 3 minutes, 5 minutes, 4 minutes. They are done trading for the day. All right. So this type of traders now, the time frames they work with are the lower time frames, like the 1 minute time frame, 5 minutes time frame, 15 minutes time frame. They are for scalpers. All right. Now we have day traders. Day traders, these are the type of trader that whenever they take trades, they they close that trade within 24 hours. All right. They are day traders. You understand? That is, they can close in the next 2 hours, 3 hours, 4 hours, or 24 hours. They are day traders. Now, swing traders are those that if they open a trade today, they are swinging that trade. It could be till tomorrow, it could be till next tomorrow, but they swing trade within days. They can hold trades for like 3 days, 4 days, 5 days. Now we now have position size traders, position traders. This type of trader, they can place a trade this month and they close it next month. All right. So now for position traders, they can deal with higher time frames like the monthly, the weekly, the daily. They can deal with those time frames. Swing traders, they can deal with, let's say, the weekly, daily, 4 hour, 1 hour, like that. Day traders, they can deal with the daily, the 4 hour, the 1 hour, 30 minutes, and like that. So now I'm a day trader, so like I am also going to teach you how to day trade, right? It is what I know how to do. I am going to teach you, right? So I day trade and I also swing trade. So now the time frames that are important to me start from the daily time frame, and that is why you see that I am currently on the daily time frame. Now, to have your time frames, you can just click on this chart interval icon. Then from there, you are going to have this type of drawdown bar. All right. Now you can click on these stars just to bring out your favorite time frame so that it can be listed on your chart, just like mine. So you can see all the ones that I put stars, they are my favorite, and they are the ones that appear on my own chart. So I don't have to have all charts on my screen. I don't have to have all time frames on my chart. You can see this is 1 minute. I do not use 1 minute. That is why you see I don't put it to favorite, right? I do not add it to favorite. But those that is scalpers, you are going to see them using this type of time frames. They'll be using 2 minutes, they'll be using 3 minutes, 5 minutes, 10 minutes, like that. But because me, I'm a day trader and I swing sometimes, but majorly I'm a day trader. That's why you see the list of my time frame is 30 minutes, right? But you see, I have 1 hour, I have 4 hour, I have the daily, I have the weekly, and I have the monthly. Now for position size trader, you can see them. They can even have 3 months time frame. They can have 6 months. They can have 12 months. Right. So let's talk about how the time frames operate. Now, on a daily time frame, on the daily time frame, it simply means that every candle that we have on that time frame, that is on the daily time frame, it takes that candle 24 hours. You know, 24 hours make a day, right? So it takes each of these candles that you can find on the daily time frame chart a whole day to be fully formed. Now, this is what I mean by that. What I mean is that this bearish candle, for instance, let's say it opens on Tuesday morning, right? It's going to close on Wednesday morning. That is 24 hours. Now, another candle open Wednesday morning. It's going to close on Thursday morning. So another candle will open on Thursday morning, just like that. So every candle that you can find on this time frame, it takes 24 hours, which is one day, for each candle to be fully formed. Now let's move to 4 hour. Let's move to 4 hour. On the 4 hour time frame also, it takes, and now every candle that you can find on the 4 hour time frame, it takes them 4 hours to be fully formed. All right, that is, if a candle opens 12 a.m., it's going to close 4 a.m. That is fully formed, and another candle will open at the close of the previous candle, and that candle again will last for 4 hours. All right, it will last for 4 hours. Same thing for 1 hour candle. Every now this is 1 hour time frame now. So every candle you can find on this 1 hour time frame, it takes them one hour to be formed, one hour to be fully formed. So, and also the weekly time frame, it takes every candle you can find on the weekly time frame, it takes them a whole week to be fully formed. Also on the monthly time frame, every candle you can find on the monthly time frame, it takes them a whole month to be fully formed. So that is how time frames work. And because I'm a day trader and I also swing, the time frames that matters to me are the time frames that you see on my chart, are these time frames. So now let's talk about the importance of this time frame. You can see that these time frames are obviously higher than each other, right? Daily is higher than 4 hour, right? 4 hour is higher than 1 hour. 1 hour is higher than 30 minutes. Weekly is higher than daily. Monthly is higher than weekly. Monthly is the highest time frame here, but I just add my monthly time frame here. I do not really use it because I am not a position size trader, but I just want to have it. You understand? The time frames I use mostly is the daily, 4 hour, 1 hour, 30 minutes, and sometimes the weekly, just to confirm something. So I'm going to be so after all our classes, I am going to um, I'm going to give you a strategy. All right. Now, because everything I'm going to be teaching you right now is just the general knowledge of forex market. But after teaching you the general knowledge, that is what everybody knows about forex. What everybody knows about forex is what I'm trying to teach you now. But after teaching you that, I will now teach you my own strategy. All right, my own strategy. How I now interpret the general knowledge. Like, you understand, the general market knowledge that is available for everyone. How I use my own, in my own way, in my own understanding, to make consistent profits out of the market. Now, previously I told you to add only gold to your chart, but right now I want you to add every other pairs. Just add 11 pairs, because lately gold has been giving me some issues, so I had to go back to um, the to currency pairs, right? Because gold is not currency pair. Gold is under is it commodity now, but these are currency pairs, right? So now you can just go and add up to 11 pairs on your chart, because as a trader it is not good to even have so many pairs. So for me, I just mark out 11 pairs. Now you can just copy, you can try to check. You might want to copy the pairs I add, the pairs I am trading. So this is it, just screenshot it. All right, you can screenshot it, then add it to your own chart, to your watch list. All right, so these are the pairs I focus on. All right, so I'm going to give you the strategy I use in trading these pairs after your general class. That is, after you've understood everything, every basic knowledge of forex. After you have that. Now let's now talk about the importance of these time frames. Now I told you from our previous classes that that trading is divided into three aspects. The first aspect is directional bias. That is, you need a system that tells you where market is going. That is price direction. Now, the time frame I use to determine price direction are these higher time frames, starting from the daily time frame. All right, starting from the daily time frame. All right. So because I'm a day trader, I start from the daily time frame. But sometimes I also check the weekly time frame. But I don't want to talk about that now until I give you my own strategy. You understand? Now, on the daily time frame, I want to mark out my market structure. Obviously, we use market structure to determine price direction, right? We use market structure and chart pattern to determine price direction. So now, in an uptrend, we believe like we want to buy, right? In an uptrend, we are going to buy, all right? You can see I have a buy projection here. That is, I have this. I'm expecting to take a buy from this point. Market is not yet there. But you'll be wondering that, but price is on a downtrend. Price is making lower lows, lower high, lower low, lower high, lower. Then why am I buying? So do not worry. That is why I say everything I have been teaching you so far is just the general knowledge of price. That is what everybody knows. But when I start teaching you my own strategy, then you will know why I am planning to buy from this point. All right? Then you are going to know the meaning of these lines. These lines, you are going to know why I have them here. All right? So do not even start questioning yourself about this, right? So now, but now on the daily time frame, I want to use it to check what my directional bias. All right, the daily time frame is just like now in trading. I said you focus on getting the direction, like you focus on getting price direction first, right? But as I said, you use a higher time frame to get price direction. So it is just like how do I put it? Look at me like ẹni tó fẹ́ travel from Lagos, or let me say from Akure to Lagos. Now you are trying to travel from Akure to Lagos. Now you now open your map, all right? So your map is like only open Google Map on your phone. Google Map is what is going to direct you, like is what is going to direct you from the point still over to your destination. So now the higher time frame is just like your Google Map. Because if you say you want to determine price direction on the lower time frames, like the 4 hour, the 1 hour, right? Like you are going to be seeing something else. You can see if I am just checking the 4 hour alone, I won't see all information I can see from the daily time frame. From the left side, I have a scroll to the left, again. So on if I should just focus on just 4 hour now, obviously I'll be looking for just maybe opportunities to sell, blah blah blah, and the likes of that. But because I have zoomed out, mo ti zoom out, ó jẹ́ kí n rí nǹkan tí mi ò lè rí lórí 4 hour. You understand? And we use this higher time frames information to project price direction on the long run. All right, on the long run. Now, do not forget that I said every candle on this daily time frame takes a whole day to form. So imagine now using that type of time frame to determine your price direction. Just imagine how accurate it's going to be, because it takes a lot of time for every candle here to be fully formed. So whatever direction you get here, in most times, in most cases, you are going to be right with your directional bias. All right. Now, when I have fully determined my directional bias here, maybe bullish, which means I'm buying, or maybe bearish, which means I'm selling. Then when I now go to my lower time frames, I will only be looking for opportunity to what? To buy. If what I have determined, for instance, my on the daily time frame, it already tells me that okay, I should be buying till this high. So sorry, me of you, can you see me? Now I want to take a buy from here, so I'll just be looking for buys, until this um particular high is validated. On this particular high is validated. All right. Yeah. So this is my target. This is my profit target. All right. But then, so now this is daily time frame, anyways. So now, when this first buy gets activated, right? I'm looking to buy and to keep buying until price gets to this point. So now, when I now go to my lower time frames, starting from the 4 hours, I will only look for like I only look for opportunities to buy. Opportunity láti buy nìkan ni mo máa wá. Opportunities to buy. Alright? According to my own strategy, I will just be looking for opportunities to buy, to buy, to buy, to buy. You know, I taught you that in an uptrend, market creates series of higher highs and higher lows, right? So since my directional bias already tells me to be looking for opportunities to buy until this high, until this until this high gets taken out. Area tí mo mark ní purple lórí higher time frame yẹn lélẹ̀. Until this high gets taken out, I should be looking to buy. In that case, what I want to do on my 4 hour is that I just want to look for pullback, that is retracement. Then till retracement is about to end, I will take my buy. Look for retracement again, I will take my buy. Look for retracement again, I will take my buy. Look for retracement again, I will take my buy. Títí price á fi dé ibi. Alright? Títí price máa fi dé ibi. Kì í ṣe bí mo ṣe draw ẹ̀rọ gan ni price ṣe máa move, but I'm just telling you that when I am trying to look for opportunities to buy, I will just be looking for pullback, then I'll be buying. And I'll only be buying throughout until this high gets taken out. You understand? Now, same thing now, I can also do that on the 1 hour time frame. On the 1 hour time frame also, whatever structure I see, mo kàn fẹ́ kí price retrace, then I will buy. I want price to retrace, then I will buy. Same thing for 30 minutes. You understand? Now, because I'm a day trader, right? Torí mo jẹ́ day trader, that is why you see that I am using lower time frames to have my entries. Then I will enter, take profit, find another opportunity, enter, take profit, and like that. But for swing traders now, oh, so for swing traders, yeah, so for swing traders, um, for swing traders, so now for swing traders, if they have their entry from this point, they are going to hold their position. Just that one trade, like they're not going to take their profit at this point. They're going to hold their position until price clear this high. And this high is going to take them, it might take them 2-3 weeks kí price tó dé ibi. But èmi mi ò lè máa dúró 2-3 weeks without closing profit, without money. I need money every week. So that is why you see that I can take my first entry from this point. I will take my profit, withdraw my money, then look for another opportunity on lower time frame. Because market ò kàn ní dédé máa lọ kókò máa push up belé, ó ṣì máa pull back fún ẹ lórí lower time frame. Then I will find another entry, then I will join again. That is how I will be joining títí tí price fi máa dé ibi. Within this range, from this low to this high, mo ṣì lè rí opportunity tó márùn kí price tó clear high, you understand? But for swing traders now, they can just enter this trade and hold it till the price might be clear high. Alright? Till the price might be clear high. And you can see, I've really talked about pips. But since I gave you candlestick Bible, so you should have read about everything pips. Alright? I gave candlestick Bible. Abhishek Osimben. You should know what is called pips now. So now, from this point now, from this my entry point to this my take profit level, it is 120 pips. Which means if I'm risking $100 here, you can see three here now. Like risk to reward is three. So if I risk $100 there, I am making $300. Alright? But for swing traders, if they risk $100 here and they want to take their profit, I'm trying to let you know the difference between day traders and swing traders. So now, for swing traders now, if they risk $100 here and they want to take their profit at this level, you can see it is times 10. You understand? 10. You can see it is 10 now. So 100 times 10, that's $1,000. So they'll be making $1,000 from their own trade. But because me, I took profit earlier at 1 to 3. At 1 to 3, I'll be making what? I'll be making $300. Alright? But because after that might take profit, I believe I'm still going to see another opportunity. And I'll take that opportunity again, and I can also make another $300. Wait for another opportunity, take it again, make another $300. Till what? Market clear this high. Alright? Alright, so that is how. So that is all about time frames. Alright, that's all about time frames. I think I have done justice to time frames. So see you in the next class.